Geopolitics and its impact on gold prices. Safe haven assets are financial instruments that are expected to retain or gain value during periods of uncertainty or economic downturns. This is because safe haven assets are generally uncorrelated or negatively correlated with the economy. During market downturns or crashes, safe haven assets tend to do better than traditional investments like stock. Gold has long been seen as a safe haven asset in uncertain times, as gold prices rise quickly in response to geopolitical tensions and events. We will explore in this video the influence of geopolitical developments and look at recent global events and their impact on gold prices. Throughout history, gold has consistently reacted to geopolitical instability. Investors have typically turned to gold during periods of crisis due to its recognized stability and universal acceptance as a hedge against uncertain times. Looking at the following major historical events shows how gold often acts as a safe haven asset for investors during times of political or global chaos. During the 1979 Iranian Revolution, the overthrow of Iran's government and resultant tensions with the West sharply increased gold prices. In 2001, September 11 terrorist attacks caused an unprecedented gold price spike as market uncertainty rose globally. The 2014 Russian annexation of Crimea increased global risk aversion, prompting renewed interest in gold as a security measure against rising tension. The Russia-Ukraine conflict in 2022 triggered global market uncertainty, driving gold prices to briefly surpass $2,000 per ounce. The widespread Western sanctions imposed on Russia further fueled investor concern, and investors rushed to hedge against geopolitical risk. Geopolitical situations such as wars and military threats, terrorist attacks and political instability, major diplomatic breakdowns especially between major economies or nuclear armed states, and finally, international sanctions and trade wars have constantly been shown to move gold prices. The table below summarizes the major global events from 1979 to 2025 and the effect on gold prices. These past events show a clear pattern that when geopolitical tensions rise, investors buy gold because it is seen as a safe investment to put your money when the future is unclear. Dario Caldera and Matteo Iacoviello, both U.S. Federal Reserve economists, constructed a news-based measure of adverse geopolitical events and associated risk called the Geopolitical Risk Index. The GPR index is an invaluable tool for research, allowing economists to gauge the level of geopolitical tension and its likely impact on economic activity. Investors often look at the GPR index to help decide how to put their money into gold. Recent geopolitical events have continued to move gold prices. Middle East tensions involving Iran, Syria, Yemen, and Israel with their neighboring states continue to threaten global stability. The Ukraine-Russia conflict will continue to hog the headlines until successful negotiations for peace are achieved. Meanwhile, new potential flashpoints in the Taiwan Straits add to the already tense geopolitical situation between the US and China. As these developments play out, gold will continue to be viewed as the safe haven asset. Although geopolitical risk is one of the key factors in gold price movement, other factors such as the U.S. trade policies and tariffs, monetary policies, interest rates, pandemics, and economic factors need to be monitored. Astute investors should analyze and follow those non-geopolitical factors to make better decisions in their gold investments. Get bullish about learning.